Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up for this almost undefinable day in the markets. It is Thursday, February 1st, 2018. All right, where do I want to start? How about this? The bond market, people, and I've been, telling people to watch this thing since forever, literally. Well, today, an epic sell-off that they could not stop drove this market to being down. Talking about the Dow Jones Industrial Average, was down at one point 135 points to being up 150 points. And the Dow Jones Industrial Average finished up about 35 points with both the S&P 500 and the NASDAQ in the negative. Now, let's go over this day so we can try to put a perspective on how important today's actions were. So, again, early on today, stocks were down. Futures were down. Bond market was selling off. I went over this in the video that I did earlier. Sometime in the early middle of the day, bonds started to stabilize. Some entity out here was buying them up. Couldn't actually force them higher, but stopped the bleeding. Then what happened? Stocks ripped higher on the back of that. Then all of a sudden, bam! Bond market couldn't hold. Started selling off again. Stocks dropped. So you can see how important it is in this environment to be focusing on what the bond market is doing. And again, I have it set up for you right on my website, traderschoice.net, right side of the page. Bonds got slaughtered today. The dollar got decimated today. Cryptocurrencies, pretty much across the board, got decimated today. Silver, down pretty hard today. Gold put on a little bit of a gain. Crude oil, a gain as well on the weak dollar. Look, you understand the price action of gold and silver is 1,000% fake. You know that. In this environment, with the dollar bleeding off like that, cash pouring out of the bond market, you should see gold and silver multiples higher than what it is now. But again, this is this whole thing is a rigged game. It's not just gold and silver. Everything is rigged. Moreover, everything is 1,000,000% dependent on what is occurring in the bond market. Now, earlier today in the video I did, I explained to you that this might be the beginning of something kind of big here, and there's no doubt about it. Is this just a run-of-the-mill kind of classic, to-be-expected pullback here? Here's my take on that. If it were not for what the bond market is doing here, I would say this is nothing, absolutely nothing. It's to be expected and needed, but the bond market here is in a danger zone. In fact, that's all I've been talking about lately. And I think, as in the video I did yesterday, I said there is a line in the sand here. The U.S. 10-year yield hit 2.79%. Again, in the grand scheme of things historically, this is nothing. But in this environment, where the Federal Reserve has done everything in their power to keep interest rates suppressed now for a decade, we have bubbles everywhere. And each one of these bubbles is dependent on its preceding bubble. That's the way it is. So we honestly and sincerely need to keep our eye on what's occurring in this market and to try to take advantage of it. But this is not an easy job here. I have no open positions right now. I closed both of my positions with small profits. Hey, you know what? I don't care. I'm happy with these profits. I really am. In fact, I felt relief when I closed these positions today just to be out of the market. I'm not lying. I want to be out of this. It's too volatile. It's completely out of control. So tomorrow we will reevaluate. As I am doing this, I mean, the market closed pretty much the moment I hit the record button here. A whole slew of earnings are coming in. I don't care what they are. It doesn't matter what they are. It's the bond market that's going to set the tone for the stock market moving forward and is going to decide whether this is just a run-of-the-mill correction we're seeing or something much worse. Don't know. We'll have to see how it plays out. But what we do know is this market is so twisted and distorted and out of touch with reality that anything is possible at this time. So we're going to sit back. We're going to wait to see what happens here. It's pretty much that simple. So that's it. This bond market thing has got me shook up. It's got even the mainstream financial channels shook up too, but they are trying to distract you. They do not want you looking at what's happening here in the bond market. They don't want you to understand that rising rates in this kind of environment is like sitting on a stockpile of dynamite just ready to go off at any moment. That's the truth. And I know you get it if you follow this blog. And let me just say this as well. I think, and I went over this earlier, the Federal Reserve and the banks here that are faking the bond market just like they're faking everything else, if they could, they would have tried to gain control of the bond market today. I don't think they're able to do this. We really may be at an inflection point, and we're going to know this in the next couple of days, maybe even over the next day or two. If this sell-off in the bond market continues to go on like this, unabated, and they tried 2 times today, if you watch the chart on my website, you can see exactly where they tried to prop up bonds. It didn't work. If they lose control and are not able to prop these things back up, we're in a lot of trouble. The stock market is in a lot of trouble. So that's the truth. Forget what you're going to hear out of the mouths of the Confederacy of Dunces who have one job and their only purpose is to cheerlead. They cannot allow you to see what's going on underneath this, to allow you to understand the dynamics of what's going on underneath this. Because if they were to tell this to people, could you only imagine what would happen? All right. With that said, you know what to do. We're going to keep our eye on everything that is going on, and we're going to readdress all of this in the morning, and I can promise you it is going to be exciting. It really is. All right, I'm going to get back to watching the market and earnings and everything else, and all of you, have a great night.